In this video, I'm going to show you how to prorate taxes. Now there's a couple of things that we have to know before we start calculating any proration problem that might be on your real estate licensing exam. So let's take a look at those prerequisites. Now the first thing we need to figure out is, does the test question want us to calculate this proration problem based on a 360 30-day year, or is it a 365-day year? Now a 360 or 30-day year simply means that they want calculations based on a 30-day month, no matter how many days are actually in that month. So January would have 30 days and February would have 30 days for calculation purposes. A 365-day year means we're going to just simply take the number of days in those months and use them for our calculations. So that's number one. Now, by the way, the test will always give you that information. Number two, have the property taxes been paid in advance or in arrears? Again, the licensing exam will give you the information that you need in that test question. Who is responsible for the day of closing? Is it the buyer or the seller? And lastly, as with any prorations, we want to know, is this going to be a cost or a credit to the buyer and the seller? And that's what we're trying to figure out in this tax proration question. Now, one of the things that I like to do before I start calculating any proration, particularly with taxes, is I like to just write down on a piece of scratch paper the months of the year, because that'll help me keep everything organized as I'm making the calculation. So let's get right to our problem here. Tim purchased 123 Main Street. Annual taxes are $1,600 for the calendar year, and the seller has prepaid taxes through the end of the year. If closing is September 17th, what amount of tax will be prorated at closing? Prorate based on a 365-day year. The day of closing will be the responsibility of the seller. Okay, now we have all the information that we need from this problem to do our calculations. So first of all, the problem identified that we're going to be making calculations based on a 365-day year, which means we're just going to simply use the total number of days in each month. Number two, it also identified that the taxes were prepaid by the seller. So they are paid in advance. So the seller is already paid all the way for this entire 12-month or 1-year period. We also found out that the day of closing is the responsibility of the seller. So here's what we know so far. I can already tell by the information that was given to me in the calculation problem that the buyer is going to have a cost and the seller is going to get a credit. Because remember, the seller prepaid the taxes through the end of the year, and closing is September 17th. So the seller is going to be responsible for the amount of taxes that were already paid through September 17th, and then the buyer is going to be responsible for the taxes from the 17th through the 18th, I should say, through the end of the year. So there's going to have to be a reimbursement by the buyer to the seller, which means that is a buyer cost and a seller credit. All right, so now that we have all the information that we need from our problem, now we can start doing our calculation. So it all starts with the total amount of taxes that are paid each year, and the total taxes paid every calendar year is $1,600. But we know that we're going to make our calculation based on a 365-day year. So what I want to do is turn this $1,600 into our daily rate, or what's called a per diem rate. So that means we're going to take $1,600 and divide it by 365, which represents 365 days. And when we do that, we get an amount of $4.38 per day. All right, so that's our daily per diem. Now we know that the closing is the 17th of September, and we also know that the 17th is the responsibility of the seller. So we're going to find out how much the buyer has to reimburse the seller. Okay, so we know, and this is where I like to go back to kindergarten math and use our little hands to do our counting. This is really important when there's like 31 days in the month. But we have September, and there are the 17th is the closing date. So we have the 1st, 2nd, 3rd, 4th, 5th, 6th, 7th, 8th, 9th, 10th, 11th, 12th, 13th, 14th, 15th, 16th, 17th. So there's 17 days that the seller is responsible for. So that means there's 13 days that the buyer is responsible for. Now let's go ahead and fill in our number of days for October, November, and December. We know that there's 31 days in October. We know there's 30 days in November, and we know there's 31 days in December. So that gives us a total of 92 days. 92 days for these 3 months. But we also have to take into consideration the 13 days that the buyer is responsible for the month of September. So we're going to take 92 plus 13, and that gives us a total of 105 days. 105 days that the buyer must reimburse the seller for. All right, so we take the number of days, 105 days, and we multiply that by our per diem rate of $4.38. And that gives us a grand total of $459.90, if I've done the math correctly, and I believe that I have. $459.90. So the answer to our question here is the buyer is going to have a cost or a debit. Cost and debit, for the purposes of the real estate exam, mean the same thing, and the licensing exam likes to use those two terms interchangeably. So there's a buyer cost of $459.90. So therefore, that means there is a seller credit in the amount of $459.90. Notice one thing here, very important when you're doing calculations for prorations. These two numbers should always be the same if we're calculating rents and property taxes. All right, and one of the things that happens quite often on a licensing exam, one of your potential correct answers could be C. And it'll say it's a buyer cost of $800 and a seller credit of $1,200. Notice that these two numeric values are different. That should tell you automatically that C is not even in the running as a correct answer. So you can eliminate that one just by that. But that's only true on proration problems that are prorating taxes and rents. All right, and that's how we prorate taxes.